I wish I had this tool already 5 years ago, because these figures are just overwhelming. Today I show you how to build an AI stock market analyst. I'm going to show you exactly how this works and compare a classical approach with the AI agent. Alright, let's dive into the code. Here's the brain of our operation, the stock agent. And these are the core steps that our agent follows. First, we define a date for which the agent should give a recommendation. In this case, we are looking at April 1st, 25. Then it retrieves the stock data and news data, which we ingested before starting this process into a database. Here we are using InfluxDB. This is how InfluxDB looks like. We are deploying it with Docker Compose, and you can ingest the market news, as you see, as well as the stock data for the different symbols like Apple, Netflix, and so on. Using the stock data allows us to calculate some proven stock metrics like RSI, moving averages, among others. And additionally, the quantitative analysis, where we're doing some simple stock price forecasting using the ARIMA method. And in the end, we are combining both time series metrics. In the stock analysis Jupyter notebook, you would find some background information about the different metrics. You can just run it and see how the different metrics are calculated, like the simple moving average, RSI, Bollinger Bands, and so on, and even get some visualization. The decisions when to buy and when to sell a stock is also explained here. And the ARIMA is also explained. And you end up with a recommendation, buying, selling, or holding a stock. After the classical methods, we are calculating a sentiment score by using an LLM for the latest stock news. In the end, the agent may send a recommendation via Slack. Or we use the agent for day-to-day trading. And here I build a simple trading simulation for the last 5 years, where we start with an initial budget of 10,000 euro. The trading costs are 2 euro per trade, and these symbols are traded. The trade logic is quite simple. Whenever we have a portfolio, we check whether we want to sell a stock. And if we don't have any stock, we are checking whether there is a positive signal in the market for buying such kind of stock. And in the end, we can compare how each method performs. But here's the fun part. I'm not just telling you which one is better. Instead, I'm letting them battle it out in real time. Both models start very well, but the classical model gains a clear lead just after a few months. Then, in January 2022, however, there's a big loss with the classical model. Both models are on par, but from the end of 2023, the classical model manages to build up a lead again, which the OpenAI model cannot catch up with. And here we can see the entire time span. Here's the full architecture. We've got our central database, InfluxDB, which we feed by using certain APIs like YFinance, Finnhub, and EODHD in order to ingest the news data and stock prices. For EODHD, I additionally spend 1 euro for the whole 5-year time span. Then the stock agent uses the stock prices and news data in order to make some recommendations from the classical analysis and the sentiment analysis, combine those, and then eventually send out a Slack message or use the recommendation for day-to-day trading. For the sentiment analysis, I spend in total 4 additional euros by using OpenRouter, specifically the OpenAI GPT-4o mini model. I also implemented a local version by using Ollama with DeepSeek, Llama, and others, but in the end, those could not perform nearly as good as the commercial models. But maybe this changes in the future, so feel free to play around with your local LLMs. Everything is available in the GitHub repository, which you also find in the description. But what do those values mean now? So yeah, I wish I had this tool already 5 years ago, because these figures are just overwhelming when comparing to classical financial products. Surprisingly enough, the classical method clearly outperforms the AI-enhanced method, but when we are looking into the Jupyter notebook, we see that the AI-enhanced method is not suffering so much from these large losses, which I also try to depict here in this Jupyter notebook. Here you see the large drop in the classical method. Overall, statistically, it's not significant, but nevertheless, there is a slight trend that the AI-enhanced method is a bit more robust. And even if we had just held one stock and held it for the whole time span, on average, we wouldn't have received the same annual return. And of course, we could have never reacted to bad signals from the market. Which brings me to the warnings about this experiment. Before you rush off in order to implement this, and I cannot stress this enough, there are some critical caveats. Choosing the right set of stocks that you'd consider trading is definitely a different topic, but maybe using LLMs again in order to assess stocks based on their quarterly figures and business reports could be a good approach. Let me know in the comments if you have some nice ideas how to improve this and use the trading agent in production, maybe even autonomously. Another aspect are the transaction costs, which I set to €2 per trade. Of course, this depends on your stock trading provider. Portfolio balancing with more diverse stocks and different markets could also reduce volatility significantly. And here's the big one. Never ever invest real money unless you feel comfortable losing every single cent. This is an educational example of AI agents in action, not a financial advice. The entire repository is freely available on GitHub, link in the description, and I'm genuinely curious about how you find this implementation. Do you think there are things to improve? What are your thoughts? What features would you add? Drop your suggestions in the comments. And if you found this valuable, like, subscribe, and see you in the next video.